Good morning to all of you. Today's workshop is very, very important from two perspectives. GSTR 9 and 9C is now being notified. Last date is 31st December 2018. And TDS and TCS provision applicable from 1st October 2018. Since we got a learned person from GSTN, let me start my theme presentation on GSTR 9 and 9C. I'm going to raise some of the challenges, not concern, challenges, while filling up annual return GSTR 9. So we all know as a background, we started with 3 returns. GSTR 1 being outward supply return cell to be filed by 10th of next month gets auto-populated for the recipient into A. So recipient can do add, modify, delete, whatever they want to do pertaining to their purchase and finalize GSTR 2 to be filed by 15th of next month. If being recipient, you do any add, modification, delete, gets auto-populated for supplier in GSTR 1A, and by 17th of next month, it need to be accepted by the supplier, and then GSTR 3 by 20th of next month. That was the background. But we have seen since July 2017, we have not succeeded in that way. Now, what we are filing today, we are filing only 2 return GSTR 3V, which is consolidated return. Table 3 talks about my outward supply. Table 4 talks about ITC, input tax credit on my purchases. And table 5, information about nil exempted non-GST inward supply. And table 6, payment to be made. GSTR 1 detailed invoice-wise outward taxable supply. So how to fill up annual return, that's we need to look at. Section 44 of CGST Act state that every registered taxable person other than ISD, TDS deductor, tax collection at source, casual taxable person, and non-resident taxable person has to file GSTR 9, meaning thereby it is compulsory for all the registered taxable person, irrespective of any threshold amount of aggregate turnover. Plus, if you're a taxpayer and your aggregate turnover is more than 2 crore, then we have to file reconciliation statement which is need to be audited and certified by a practicing cost accountant or chartered accountant. Now, very first question which is coming to my mind, and I'm posting to you as well, sir. If you have any answer to this, you can definitely convey to us. The first question, I'm having 4 registration, which I'm asking repeatedly for reconciliation statement, GSTR 9C perspective. I'm having 4 registration in 4 different states. My aggregate turnover in particular states, say Delhi, is 2 crore 10 lakh rupees. But in other 3 states, my turnover is just meager amount of 10 lakh rupees. So if I look at aggregate turnover definition, it is a pan-India, all India, crossing 2 crore for all 4 states, totaling together 2.10 crore for Delhi state and other 3 states, 10 lakh, 10 lakh, 10 lakh, 2 crore, 40 lakh rupees. Now, question comes, am I supposed to undertake GST audit only for the Delhi state, where aggregate turnover is 2 crore 10 lakh, or I have to go for GST audit for all other states where my aggregate turnover, my turnover is not more than 2 crore rupees? needs clarity. And why I'm posting this query? I'm posting this query, so you can note down everything and then you can deliberate. I'm posting this query from section 35, subsection 5, read with rule 80, subrule 3 of CGST rule 2017. Aggregate turnover is the pan-India basis. So we require little clarification. It is only for the state where the aggregate turnover is more than 2 crore or totaling together. First point. Second point. Look at GSTR 9 notified. I'm sure you must have run through. And what is the perception coming from the trade? And what is being stated? That this is nothing but a compilation of our outward, ITC, and tax paid. But sorry to say that. I'm going to highlight 7 big challenges for preparation of GSTR 9 annual return. Let's start with the first one. First one talks about, and GSTR 9, if you look at, it has got 6 parts. In 6 parts, it is being divided, and there are 19 tables, 19 tables. Now, what are the information this GSTR 9 is looking for? Reconciliation of ITC from 2A to GSTR 3B. So, first question goes to all of you, that whatever purchase you are finding in 2A, can you take credit without looking here and there in your 3B? My answer is big no, you can't. For availing credit, there are the 4 parameters. You must have tax invoice, you must have received goods and services, and your supplier must have paid the taxes, and recipient must have filed a return. Tell me, your supplier has uploaded his outward supply in GSTR 1, auto-populated in 2A, but he has not paid the taxes. But you have paid the amount to the supplier. Can you avail credit? As per law-wise, we can't avail credit. So what happened? Do we require to go back and check all such 2A, my ITC, whether the supplier has paid or not? I'm not having any automated where I can verify. I can go with GST number-wise, vendor-wise, but no automated document which can say this amount is not paid by the supplier. The first challenge. And as I go in a trade, and trade is also understanding that this GSTR 9 is nothing but a simplistic mathematical calculation. Sorry to say that. I'm not agreeing with them. It's a big challenge. Come to table 2. Means my challenge number 2. While filing GSTR 3B in table 4, we have taken consolidated credit, irrespective of input services, and capital goods. Am I right? We have not bifurcated. So there may be a situation that you may have maintained your ITC ledger pertaining to input services, and capital goods. May or may not. If you have not maintained, then go back and prepare your ITC pertaining to input services, and capital goods. Because your GSTR 9 is looking for the details. Input services, and capital goods. Which was not warranted in GSTR 3B. But now you require to fill up those numbers in GSTR 9. Challenge number 3. Challenge number 3 is you have to also fill up details of ineligible ITC. What is ineligible, you know? As per GSTR 9, we get certain purchase, those are called block credit, negative list, under section 17, subsection 5 of CGST Act. Credit is not available. So what happened? If I purchase some item on which credit is not available, then I debited my expense account in my financial statement. So I have not kept any details of the same. But now in this GSTR 9, we have to mention these numbers specifically. So you have to go back invoice-wise and check how many such purchases of 17.5 are ineligible credit. Details is required. That's what GSTR 9 is saying, challenge number 3. Challenge number 4. Challenge number 4 is that a particular table, and this table says that we have to fill up transaction, any kind of new entry inserted or amendment is being made in April 2018 to September 2018 pertaining to the transaction of financial year 17-18, starting from 1st July 2017 to March 2018. What are those transactions? Let me take 2-3 examples. Example number 1, the first example. Let's say you have raised invoice on 1st January 2018. And you have amended this transaction. Maybe your liability was 18 rupees, but you have mentioned only 15 rupees as liability. You can always amend Table 9 GSTR 1. Am I right? You can amend that. But those transactions need to be captured separately for annual return purpose. Second, whatever entry, and this is the very important month for all the taxpayers, September. Let's say you have got some purchase on 1st January 2018. You forgot to enter the entry in your books of accounts, in your financial statement account, and your accounts got audited. Question goes back to you, can you avail this credit now when books got finalized and audited? Can you take credit in the September month, or you can go back in the January month where you missed the transaction? You can't revise your return. So you can't revise your GSTR 3B for the month of January. No way possible. But of course, you can take this credit in the month of September, and September is the last month to avail this credit. So what happened? You can put these numbers in table 4 of GSTR 3B, avail credit, but that would be prior period expenses from income tax perspective. Will have different implication, but credit is available. What happened? There was a liability on 1st January 2018. You forgot. You have not mentioned in 3B. Even your auditor did not check. Your accounts got finalized. Can you show that liability now? Of course possible. But you have to pay along with interest. So all such transactions need to be captured. When I'm saying the bigger challenge now, you have seen that recently government has said that for July to September, July 17 to September 2018, GSTR 1 can be filed by 31st October. So if it is filed by my vendor, my supplier by 31st October, I will avail credit. It will be reflected only after 31st October, but my 3B need to be filed by 20th. How to reconcile? If at all, are you getting my point? So there's a big point that the GSTR 1 due date is 31st October, then quite obvious 2A going to be auto-populated for matching only after 31st October. But 3B to be filed by 20th October. And let me tell you, I'm cautioning each one of you here. 2A is very, very important. You may have some purchase. And I said you can't take 100% credit for the region your supplier has not paid the taxes. Maybe a region you have taken credit is not available. You have to go back individually invoice-wise. It's not mathematical equation. Please, sorry to say that. A lot of taxpayers have started believing it is only certification. Only mathematical equation plus minus, that's all, nothing else. But I'm telling you, a lot of work we have to do. And we have to make sure those numbers are correctly picked up. And now take a situation, certain vendors could not get migrated, right? And for them, window got open in the month of August. And what is the last date for them filing GSTR 1 and 3B? 31st December. So just imagine if I purchase from such vendor who could not get migrated. Now they will file by 31st December. When my 2A are going to be generated? Only after that. But I have to do everything by 28th. Challenging, big challenging. I'm putting those questions because these questions are all related questions. This is not the mathematical equation. You are getting my message, am I right? Come to the next point, challenge number 5. Challenge number 5 says HSN-wise detail. 4-digit, When I'm selling, I'm a big player. For me, no problem. But initially, what is the provision given to us? If my aggregate turnover is less than 1.5 crore, I need not require to mention my HSN code. If it's 1.5 to 5 crore, 2-digit. And more than 5 crore, 4-digit. This annual return looking for HSN-wise your inward supply details to be mentioned. Your purchase inward, not outward. And just imagine you have purchased goods from a supplier who was having aggregate turnover less than 1.5 crore and he has not mentioned HSN code. And now you have to compile the return HSN-wise of such vendor from whom you have purchased. Are you understanding the challenge for all of us together? And this is what GSTR 9 is saying so. We can always capture our HSN code for outward supply, but capturing HSN code of my vendor who has not mentioned because he was less than 1.5 crore, it is going to create big mess and challenge for all of us. Challenge number 6. So you're also, catching me up. So you're getting that, he's giving all challenges one after another. Challenge number 6 says you have to also mention detail of purchase from composition dealer, whatever goods you have received from your principal supplier for job work, 143, and whatever goods received on approval which is not returned. We have not captured these transactions except composition. We have not captured these transactions neither in 3B nor in GSTR 1. Now we have to capture all those transactions from July 1 for filling up GSTR 9. And 7th one, the last one. This GSTR 9 is looking for, we have to mention details of refund filed. Refund filed, sanctioned, rejected, or pending. Even looking for details for any demand of taxes made by the government authority. And whatever taxes paid or supposed to be paid need to be mentioned in this GSTR 9. So I have picked up 7 big challenges. I have not gone into minutely. Maybe there will be GST reversal for non-payment within 6 months. That transaction need to be captured. So I'm saying these challenges are not only simplistic arithmetic, mathematical plus minus. These are going back to your books of accounts and start reading from July 1, 2017, which we might not have done for filing 3B and GSTR 1. So maybe these are the open question on GSTR 9 and coming to 9C. Reconciliation statement to be audited by chartered accountant and cost accountant. Reconciliation statement of what? Of my sell, ITC, purchase, with billed and non-billed. Lot many parameters given, and there are 5 part and 16 table. And these forms are only given and notified. These are still under development mode, and certain figures will be auto-populated from my 3B and GSTR 1. So I'm just experiencing, once this utility comes, then only we can experience what kind of numbers are flowing in from 3B and GSTR 1. And I've said to all of you that there's certain date mismatch. GSTR 1, 31st October and 31st December, how I can file my GSTR 3B for the September? Maybe strategically, I'm just posting this question to all of you. Can we delay filing GSTR 3B for the month of September and pay late fees of 50 rupees per day, 25 CGST, 25 SGST? What is the option left out? Unless the 31st October date is gone and 2A gets populated for availing ITC. Otherwise, they should be extended. So these are, so caution. I'm telling you. Now, question comes to my mind, whether these forms which are not sync with the GSTR 3B and GSTR 1, had it been GSTR 1, 2, and 3, there should be automatic matching and mismatching. But now this 2 and 3 gone, so automatic matching, mismatching can't be. It has to be done inside, in the house. You have to pick up the invoice and do all the needful work. So we are preparing ourselves. Let's prepare, and in today's seminar, we can also discuss those points. We got learned person from GSTN. He may throw some light. Now coming some of the parameters pertaining to manufacturing, service, and trading sector. We are also going to touch base some important issues for manufacturing, service, and trading sector. It is law related. So I'm not looking any answer, but if Sri Basisji knows something, some background of it, he can definitely deliberate on those points. The first point. We all know now there is no relevance of manufacturing, service, and trading sector. GST applicable on supply of goods or services. And we know term supply is subjective and inclusive. So we got debatable. Let's remain there. The first point, number 1, transitional credit. Fortunately, this Tran 1 date got extended. Who could not submit Tran 1 approached to the nodal officer, and their case is going to be referred to the GST Council. So 31st January by order, but the date can be extended further by 31st March 2019. Having said that, in transitional credit 140, section 140, subsection 1, the first biggest issue. There is a retrospective amendment by the CGST Act 2000, Amendment Act 2018. What is this retrospective amendment? They have inserted explanation, and by inserting explanation, they have stopped that we should not avail credit on cess, education cess, secondary higher education cess, Krishi Kalyan cess, Swachh Bharat cess, with retrospective date, 1st July 2017. But while doing so, law is made in such a manner that 3 big challenges coming in. The first, can you take credit of service tax credit, which is reflected in your last month return? Can you take credit of input, which is not in the stock? Can you take credit of excise duty on capital goods? 3 challenges. Otherwise, what is the provision says, 140 subsection 1, I can take credit to whatever credit shown in my last month return in GST, am I right? But with the changes, retrospective amendment made, these 3 problems has arisen. Please go back and check. And we are representing to the government authority, while amending the law, this is inadvertent mistake has happened. Point number 1. Point number 2. We got works contractor and construction sector. They got unfinished stock, means under constructed property on 1st July 2017. Can't they take credit of excise duty on deemed credit concept when they have to discharge GST now 12% or 18%? If you go to section 140 subsection 3, there is a bar that this is applicable only for the trading sector. So this is the second question. Third, in transitional credit, there is a recent Gujarat High Court judgment in the case of Philco Trade Center Private Limited. And very interesting judgment. If you're a first stage dealer in excise, you can take credit provided you are having invoice. And invoice should not be older than 1 year. But Gujarat High Court has gone and they have a different view than the Bombay High Court judgment and said this 1 year limitation is not applicable. So it means you can go back to any time period provided you are having invoice and stock in your hand for availing credit. So transitional credit supposed to be by Tran 1. Tran 1 date 27th of December 2017, but still a lot of taxpayers are struggling because they could not submit the Tran 1. But these judgments are coming only thereafter. So implication, whether it is in RAM or PERSONAM. Having transitional credit said, second issue, which is applicable for manufacturing and service sector both together. Refund on export. Refund on export. And this question I am posting to you. There are 2 methods. Either we can export without payment, execute LUT, am I right? And can take refund of ITC, am I right? And second option is no LUT execution but on payment of Which method is better? Tell me. IGST is for the region? Refund, there are two ways. Let me explain if you do not know this particular provision, which we are representing at number of forum. Let's say I'm an exporter, I got 50 rupees purchase, and I paid 18% GST, meaning thereby 9 rupees. And 9 rupees consists of input credit, 6 rupees, input service credit, 1 rupees, and capital goods credit, 2 rupees, 9 rupees. And my outward is 100 rupees, export, 18%, IGST. Let's say I'm following IGST route. So what happened? For paying 18 rupees, I will adjust 9 rupees and pay 9 rupees in cash, but I get 18 rupees in cash back from the government, am I right? But if you follow ITC route, then you are D-bar. You can't take refund of capital goods. 2 rupees credit is a block credit for you. You can't take. So what happened? Comparison both way, IGST versus refund of ITC, my capital goods credit is not given. So maybe you have to go back and check which method you should follow and why you should follow. First. Second, for service sector, there are two big problems. The first problem pertaining to intermediary services. Export of services. What is export of services? Supplier must be in India. Recipient must be outside India. Money should have been received in convertible foreign exchange, and place of supply must be outside India, and he should not be merely establishment of distinct person. Am I right? Let me create one example for you. Let's say I'm in India, I'm in Delhi, and you are all in Korea. You asked me, Mr. Jain, you kindly develop my Indian market and identify my prospective customers in India. Right? I will supply my goods to those prospective customers in India. Once they buy goods, I will give you some percentage of that turnover as a commission or by whatever name called. So Bimal Jain, located in Delhi, giving services to the Korean company. Now once customers are identified and you are supplying from Korea to those customers, I'm being paid as a percentage of turnover. Tell me, it is export of service or not? Yes or no? Few of the guys are saying no, because they are well learned. They're saying we are well learned, we are intermediary, we are only arranging or facilitating supply of goods or services between two persons, am I right? But tell me, am I giving services to my Indian customer? No. I'm giving service, GST applicable. What happened? No credit because healthcare is, my price become incompetitive. And I'm sure in service sector, I can bet 90% of companies are not following this cross-charge method, which is going to be big hue and cry in time to come. And no clarity provided. Our only earnest request to the government would be, they must look into this transaction. When ITC is available, then cross-charge need not required. Only revenue neutral transaction. But now GST is a destination-based consumption tax. Why other state will agree to this proposition? So we have to have something coming out from GST Council. And last touch base point to all of you. Sir, ISD return. Now, this is from GSTN perspective, and last date is 30th September. Sir, we are getting feedback from the trade members. Though it is being delinked now, that GSTR 1 gets auto-populated in GSTR 6A, it is delinked. You can add invoices. Let's say it was earlier by filing GSTR 1, vendor filing GSTR 1 gets auto-populated in 6A for ISD. But by mistake, because that month he has not filed the GSTR 1, I have taken certain invoice of July 2017, added. And later on I found that it was there in the month of August or September in 6A. So he has deleted that invoice, system is saying some error. And what is that error? It's not getting corrected. So ISD return still as on date. We are having these challenges, and I'm being given in comment and feedback by the trade members. Maybe this part can be looked at. And they're sending mailer also that this ISD, this error is coming. What is the meaning of this error? They are not getting any breakthrough. Maybe you can suggest what is the way forward for ISD return, because last date is 30th September. Now coming to my conclusion part, I have tried to just create theme for all of us together. The igniting your minds. Why today's GST conclave is very, very important. From 9C. So with this, allow me kindly to sum up my theme presentation. Thank you very much.